New Year, everyone. This is Rick Bosley, the Bosley team, giving you your Monday morning market update. If this is any indication like we had last year, I remember specifically, vividly, January 4th, people just came out of the woodwork. So a lot of our clients, a lot of our database, a lot of our buyers and sellers pushed pause for a little bit. And they said after the first of the year. So right now, we're going to see a quick surge in real estate. So I want to give you an update in market. So if you are in the market to buy or sell or invest, you are equipped with the most up-to-date information. The biggest thing that's been impacting the demand has been the affordability. And the affordability is directly correlated with the interest rate. So let's take a look at what's happening in the interest rate world. This is, as of today, a 30-year fixed is sitting at 6.67. If you can afford the 15-year, do the 15-year fixed at 6%. The jumbo loan, which is going to be significantly higher loan amounts, that's going to be closer to 7. Check this out. I love seeing FHA, that it's the government-backed loan, and that is really to help affordability. It's 3.5% down, and you can get there for 6%. When we see this, we're going to be able to see that it's trending well, right? When you look at what's the Friday's trend rate, so I guess they're closed today. So this is as of Friday, excuse me, with that. It's minimal. It's moved down slightly. You can see where we were not too long ago. I mean, this is just what, October 16th. We're sitting there at 8%, and now we're already back down. So we saw the spike this is kind of the normal that we're expecting. This is July 4th, 2022. And so we've been there for about a year and a half now, and staying at these 6, staying at these 5. But when we look there at sitting at 6%, 5.99 for fixed, that's showing pretty well. So there's the mortgage rates. And when we see that, we're not going to see a whole lot less because it's directly correlated with inflation, and inflation seems to be stabilizing. And if the government were to lower the interest rates, then everything's going to be lowered with it. We already have seasonality, we already have timeline, and that's going to create a surge for us anyway. So I believe that this is going to stay pretty steady there. The big wild card that we need to look at is going to be, of course, the election year. So that's what's happening with money. And now we're going to take a look at what's happening in terms of the inventory. And I've got some stats, and I can just easier read it for you. In the last 7 days, 675 new homes have been listed for sale. These homes are around ORA, the Orlando Regional Realtors Association. So it's really greater Orlando and outskirts of it. So 675 new homes. 811 current homes have been had a price reduction just in the last 7 days. So 811 price reduction. It's still a great time for buyers if you're looking to be able to capitalize before the surge of other buyers come in. Get in the market now. You can make the offers. Sellers will likely have you'll have less competition. Therefore, there possibly could be some deals out there. And in any market, the good homes sell fast for top dollar still. So is it a good time to buy? Is it a good time to sell? I think the market is going to heat up a little bit more than it is in December, January. And I think that because history and patterns show. In the last 7 days, 330 homes have gotten back on the market. So they took a break. They said, let's just chill. Let's just remove. It expired, or it got canceled, or it withdrew, and that seller relisted it, and it's back on the market just in the last 7 days. In the last 7 days, this is a big number of sold, and it makes this not a surprise. End of month, end of year, 1,082 homes have sold. And this, not congratulations, but welcome, is National Expired Day. It's the most expireds that we ever see typically in the calendar. It's because a lot of listings, they just say, let's take it through the end of the year. So in the last 7 days, 571 homes have expired, 433 of those just in the last 24 hours. So there's an opportunity out there. If you're looking to buy, let's take a look of what the 6% or 6.5% interest rate does and how it impacts your affordability. If you're looking to invest, let's take that compared to what is your investment going to be. Is it short term? Is it long term? Is it a flip? Is it a wholesale? Is it a subject to? We received a subject to offer over the weekend, and those are an option as well. So when we're looking to invest, I like to go how much money in, how much money out, what's my risk, and what's my noise, right? Those are the three things we're going to look at is profit, money, risk, vulnerability, and noise. How much work do I have to do around it? If you're interested or intrigued in becoming an investor and adding or subtracting your portfolio in real estate, let us know. We'd love to be able to kind of put some pen to paper, run some numbers for you to make sure it's a good investment for you. And based on where you're at in life and based on where you're at in stages, we can take a look at those three factors: your money, your risk, and your noise, and really find the best portfolio for you there. If you guys have any questions, hit us up. Let me know. On Friday, I'll be doing a live stream again. We're going to have some Wednesday, on some wealth building tips and what we're doing to really analyze and look at money and how we can build a wealth, not just through real estate, but other aspects like insurance, like investing. And we'll have some different speakers on here. So if you like this stuff, hey, just flag or earmark wherever you saw this live stream. And that way, every Monday, you'll see it notified. And every Wednesday, you'll see it for our Wealthy Wednesday. Guys, have a great day. Happy New Year. Thanks for watching this. Talk soon.